Good afternoon. I am Jackie Hill with Berkshire Hathaway, and I am here with our local lender. His name is Jeremy Owens, and he's with First Community Mortgage. And today we're going to talk about health and safety, whether or not it's a good time to buy, and we're going to talk about the difference between refinance and forbearance. So, Jeremy, thank you for being here today.
Absolutely. Jackie, thank you so much for putting this together. I know a lot of clients have been contacting both of us, as we were talking about earlier. So many questions going on surrounding current events. And, as we're starting to get used to what's going on and kind of hoping to return to some sort of level of normalcy in life, people getting antsy to get into a new house. They were planning on, moving forward with the purchase this year, maybe planning on selling, of course, buying. Um, all sorts of concerns are going around out there. So one of the top things that I've been asked is what you, as a realtor, are doing to provide safety and health and in kind of viewing homes and doing presentations, buyer presentations, listing presentations, helping people get in and see houses. So why don't you tell us what you're doing?
Well, a lot of my clients, we're actually doing virtual appointments where we're using Zoom or Facebook Live or whatever we need to do to make the appointment so they can actually talk to me from the comfort of their couch.
Awesome.
And we're looking at properties through virtual showings. And they go out to see the properties sometimes, most times when they're already under contract. And we're very careful. They're wearing gloves when they go meet with someone. They're wearing the face mask. We have the hand sanitizer. We're spraying down doorknobs. I actually have sent teams of people in to sanitize houses prior to, just to make sure my clients are safe.
Good.
And as of yet, I haven't had anybody pull out of the contract. We actually get a good look at the house, so they're happy with going in and they're comfortable with making the purchase or putting it under contract.
Yeah, fantastic. Yeah, and we're kind of trying to do some new things and push some existing ways of communication that we had in place, really focused around streamlining and electronic communication, whether that's documentation, uploads, having conversations over the phone, and maybe through like a video chat like this versus actually meeting in person. Obviously, the health and safety of our clients is at the top, just like you. And one of the things, main tools we're using right now is our app. And that app can be downloaded and installed on a smartphone, mobile device. And obviously, you can complete an application through there. There are awesome tools like mortgage calculators. You can track the progress of your mortgage through to closing. But even more importantly, in light of today's world, it has a camera capture function that will allow our clients to take snapshots of documentation like driver's license, like tax returns, that may not be on the computer already as electronic files. So they don't have to worry about bringing it in to copy or running down to the UPS or Publix to scan and send over to us. We have secure website portal that we allow folks to upload through as well. So, really taking advantage of the electronic methods of communication right now is really helping achieve our goals of health and safety. One additional step that we've taken is making sure that we're following the state of Georgia's guidance, as well as the agencies, Fannie, Freddie, FHA, VA, in allowing flexibility in closing. So we are allowing things like a mixed Zoom, teleclosings. I know some closing attorneys we work with are doing drive-by closings, maybe curbside special closings. So there's a lot of flexibility, and we have worked hard to make sure that we have those options available.
And that's awesome. That's huge. So what challenges are you running into?
Yeah, one of the biggest things, and it's so unfortunate. Our hearts really go out to the clients that are facing this, but the furloughs, the temporary reductions in income, maybe even loss of job, and some of the and again, this is kind of in compliance working with the different agency guidelines. We're taking as flexible an approach as possible. We're allowing people with certain documentation and confirmation of maybe a return date, if they've lost a job, when they're going to be called back. If we can document that when they are coming back, document that their income will be at the same level, document that their position will remain the same, then we're allowing transactions to move forward. We're not just denying loans. We're not just canceling the process on folks and kind of leaving them hanging. We're doing everything we possibly can to stay engaged with them, to help them along the way, and make sure that we still meet the closing dates as best as possible.
And Jeremy, that's huge, because most people, they think that if they're furloughed, they can't continue with the process. And you're telling me now that if they know they have a date to go back to work, that actually can close on their home.
Yeah, there's still flexibility to move forward. Of course, every case is a little bit different, but with certain documentation, we absolutely can continue moving forward.
Well, that's awesome, Jeremy. So let's talk about, I have quite a few people that's called me about refinancing and asking me whether they should refinance in forbearance. And of course, I always give them your number. So let our audience know what's the difference between refinancing or whether they should refinance.
Yeah, sure thing. So, the question of refinance and forbearance is it's pretty big right now. Obviously, rates are super low. And with rates being so low, it makes it, on one hand, a fantastic time to move forward and buy. And we can talk about that in just a moment. But it also makes it very attractive to refinance your existing mortgage, save some money, maybe skip a couple of payments, get an escrow refund check back that makes it even more healthy and more attractive. Maybe helps that checking account balance go up a little bit, which we all need. But just kind of think about a quick refinance example. If you save just $200 a month, you were excited to receive the stimulus check.
Right.
Saving $200 a month is like getting 2 stimulus checks a year, maybe for 30 years, 20 years, 15 years, however long you keep the mortgage. So, even the opportunity to save, $200, $100 a month, plus potentially skipping mortgage payments for a couple of months, maybe just 1-2 payments. I mean, it's a big deal right now.
It is a big deal.
Yeah, absolutely. Some people are even choosing to take advantage of the low rates and shortening term. So a lot of people out there are moving forward with shortening their terms, which for us in the mortgage industry, for you in the real estate industry, that's just building even more equity and allowing people to be put in even better positions for the future. On the other hand, forbearance. Obviously, the CARES Act was pushed through,
Mm-hmm.
and it offered a lot of great protection to all of us. One thing one provision was allowing homeowners who are in duress, maybe lost a job, maybe on furlough and can no longer make that mortgage payment, to push those payments back through forbearance. Forbearance, and this is a really key here. Forbearance is not a payment holiday. Forbearance is not payment forgiveness. At the end of the day, the mortgage company has to be paid. And why is that? It's not because it's a big bank and the big bank is greedy. It's because the people who fund those loans, the mortgages for all of us, may be investors like our retirement accounts, 401ks. It could be a teacher's pension fund who decided to invest in something very safe historically, like a mortgage. And when the borrower can't pay, when the homeowner can't pay, and the servicer can't send those checks back to the investors, then everyone hurts and everyone pays a price ultimately. So, forbearance is a great thing if you need it. And if you need it, I would highly recommend, make sure you understand what the fine print is. Make sure you've had the conversation with your mortgage company and servicer and that you get it in writing. One of the more common forbearance approaches is to miss a few payments, 6 payments. And then on the 7th month, when the end of that 6-month payment has expired, a lump sum is due of month 1, 2, 3, 4, 5, 6, and 7. So just a quick for instance, Consider $1,000 a month mortgage payment, 1,000, 2,000, 3,000, 4,000, 5,000, 6,000, 7,000.
Wow.
$7,000 due at one time. That's pretty tough. Even in good times, right?
Yeah,
And
most people can't do that.
yeah, most people can't. So there's other options. Maybe some modification, some form of loan modification, maybe additional breaking up those payments over time to repay. My recommendation is please understand what you're doing. It's a stressful time. It can be a very emotionally taxing and challenging time when you have to consider forbearance. But read the fine print.
Right. Right, because we don't want to put people in a situation where they can't afford it after that 7th month. They
That's
can't
it.
afford to make the payments.
Yeah, we don't want to see folks in that position. And if you're thinking about buying a home or selling your existing home and then trying to buy another one or refinancing in the near future, if you're in forbearance, it's going to be very difficult to qualify for a new mortgage, and that includes a refinance. That includes selling your home and then trying to buy a new one if your loan was in forbearance and had not been caught up. By the time you sell it, it could pose some challenges.
Oh, wow. Thank you, Jeremy. That was some great information. And I want to make sure all our audience understand what's going on. And you made it very clear. I really appreciate you taking the time out to speak with me today. And the next time we speak, we're going to talk about credit scores and what people need to do to get ready to buy.
Yeah.
And so, audience, make sure you tune in with us next time. Jeremy, can you tell everybody your information and how they can contact you?
Yeah, absolutely. And Jackie, thanks again for putting this together. I really appreciate you taking the time out of your busy schedule for us to be able to share this info out there. Again, my name is Jeremy Owens. I am a loan originator with First Community Mortgage, and my NMLS number is 627356. You can reach me via phone for a conversation. We can talk about refinancing. We can talk about the market. We can talk about interest rates, qualifying for a new mortgage. You can reach me at 404-518-9311, 404-518-9311. Thanks again and have a great day.
Thank you, Jeremy.